Friday, what day is it? It's Wednesday, our Wednesday stream. And as on normal Wednesdays, it's our question answering day. I've found a few questions that I'm going to answer for you that some people have put into the comments. And at the same time, we're gonna have a look at the market. And I'm just opened it up to this one, and looks like quite a good one. I'm not going to be trading in this stream. Um, I'll be trading again a little bit later in our live session in Telegram. So I'm going to save it, but this could have been quite a good one to start with. The first one I looked at, you can see the pattern there. It's as plain as can be, and it is following the pattern. So just looking at this would be quite a good one. This would be, this would have been quite a good one. But I've said to myself, no trading. I'm fully tempted to trade on this, but I'm not going to. But that would be quite a good one. But let's start with our first question. Now, our first question was, how can I distinguish experienced intuition from emotions? Well, experienced intuition is based on a recurring market patterns and should have a clear rationale behind it, really. If a decision is accompanied by fear, greed, or a desire to recover your losses, it's most likely driven by emotions. That's what I would say, and I would recommend recording these reasons behind every entry and then checking it against your results in your trading journal. I would make notes of this each time. So every time you trade, you put it into your journal, and then you can look back at your journal and see where you're going wrong, and see which ones were done on clear rationale, or which ones were done purely on emotions. And that's where you can learn you can control your emotions and not make mistakes. And that is how I would say to distinguish experienced intuition from emotions, really. Yeah, so quite a good question. Quite a good question. Now let's have a look at the market again. Now we would have, if we put money on this, we would have won that, but it has changed direction. It's broken its pattern, um, but we would have won that one. And it could still be going the same direction. But let's have a look at something else. We'll go to the top, like we normally do, and we've got something else here as well. And looking at its history, this could be another one. Well, it looks like quite a good market today. Looking at the first two, um, yeah, this would have been another one. Looking at that, it's a bit indecisive now, but it would have been quite a good one, I think. But let's carry on looking at the market. Now we're just going to stroll around and see what's around, really. There's another pattern here. Well, it's full of, today looks like quite a good day, so Telegram should be quite a good session. But things can change. Telegram's nearly 2 hours away, so things could change. But looking around still, yeah, there's another definite pattern there. It's gone a bit skew with a little bit there, so that would be a little bit iffy to trade on now. But if we called it earlier, it would have been quite nice. And looking at the next one, see, this one's very different. Not a great deal there. Not very predictable, really. That's not something The first two were quite good. Another one there. That's just levelling off at the bottom of the bottom Keltner. Not so good. But keep looking through. Now. See, the last time it did that was right back there. But there's nothing saying it won't do it again. But it had a lot of pressure from sellers. A lot of pressure. And it looks like it's going to go back down again according to the RSI. And it is. It's going back down again. So, yeah, there could be something there. This one's a little dangerous. This one will be a little bit more like gambling. You'd have to watch this for quite a while. And then we've got this one. A little bit unpredictable. Something I wouldn't get involved in. Nothing really there either. Yeah, one of my students have earned enough money, and him and his wife are starting up a spice business. Import and export spices all over the world. Then they're going to start with what did he say he's going to start with? Yeah, he's going to start with pepper. Sounds a little bit interesting, but he earned he earned a fair bit in the last sort of year of trading, and he's going to whack some of it into a import and export business with pepper. Sounds like a little bit of fun. He probably won't be doing much work. He'll probably be getting other people to do it, so he'll just sit there and watch the profits coming in. But that's thankful to his trading. He's actually done quite well. Now, where were we here? There it is. Yeah, he had a not quite a large withdrawal the other week, and that's what he withdrawed it for. I think he's really doing it for his wife, really. To give his wife something to do. This one would be a little bit unpredictable, really. There we go. Oh, that would be purely gambling. You'd have no idea what that's going to do. No idea at all. I want to go back to that top one. What's that looking like now? Yeah, there's nothing there now. Nothing there. Nothing there either. What's that done further back? Yeah, there's no real telling where that's going to go. No. No. It started. The stream started off with a few quite nice opportunities, and they seem to have gone now. See, this one's been doing this quite a long time. Now it's trying to, the buyers are putting a little bit of pressure on, and they could be making a difference here, but the RSI is saying something quite nice here, but that can change quite quickly. Don't rely on the, or there you go, it's changed already. So don't rely on it. They're just there to, like, the RSI is there just to really tell you, have a look at it. You know, this is happening at the moment, but things can change, and as it just did, and it's changed back again now. So the RSI is giving you sort of a clue. Don't don't trade on the RSI, because that can change quite quickly, but it's there to help you. And at the moment, it's telling us the right thing. I use the RSI, but I only use it as a sort of a guideline. I would never trade actually because of what the RSI says. It's a handy thing to have, that's for sure. This one's a little bit bouncy. Look at the size of the wicks to the size of the candles. So this one would be a little bit risky, because it could bounce back quite quickly. Yeah, not something I would be really interested in. Now, where were we? Here we go. Let's dig out another question. The next one I found is, how do I choose a broker? There's quite a good question, because there's quite a lot of brokers around. Well, there's a hell of a lot of brokers around. But first, choose a broker based on the specific asset class you want to trade, depending on what you want to trade. Then compare not only the commissions, but also the spreads, the swaps, and execution quality and withdrawal conditions. Check the conditions on when and how you can withdraw. For stocks and exchanges, commissions are important for Forex, the spreads and the costs per lot. For metals, spreads and positions and financing. And you should always check the broker's regulation and the protection of clients' funds. That's quite important. Check your the regulations and the protection. So you want some sort of protection from on your funds, really. So yeah, that's how I would choose a broker. So don't just pick a broker. Research them first. Research the broker before you go ahead and use that broker. And that was question number 2. So we got some more coming. Let's go back to the market and have a look, see what's going on here. Oh, it's really, and see what, when we first got on here on the stream, there was quite a few that were quite good. Now there's none. So, well, I'm saying there's none, but they're a little bit more difficult to find now. So that one's a little bit unpredictable, right on the middle Keltner, and it's bouncing quite a bit. So I wouldn't bother with that one. The idea is not to just trade on anything. You could spend 20 minutes searching for a good opportunity. So looking at the history here, I wouldn't put a trade in here, because there's no real telling where it's going to go, and there's not a lot of movement there, and not a lot of movement at all. So I wouldn't worry too much about them ones. Going on to the GBP. So the RSI is saying it's going to rise, not very sharply, but I reckon that's going to level off more than, yeah, there he goes, it's leveling off now. So I wouldn't bother with that too much. This one, there could be something here, but it's a bit risky. That would be a bit of a gamble on that one. And this one, same again. There could be something here. You'd have to sit and watch this one for a little while to see what's there. And going on to the next one. Same again. The RSI is saying it's going to rise. It's bouncing a little. It's done this before. It's got to the similar levels here. Back here it rose a little bit higher. According to the RSI, it's still going to rise. So there could be something here. But the RSI is not, it's jumping around a little bit. Looking at the next one. Nah, nothing there. Let's just have a flick through and see if we can find something quickly. Something which would be what I would look at as an opportunity. No. 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 Let's dig another question out, shall we? Now, the next one would. This is quite a good question. Quite a good question. Why do I need a journal? Now, a trading journal will show you what you. Well, what can I say? A trading journal will show you not what you think is working. If you understand what I mean. But what actually works in your trading. Record your entry, exit, stop loss, and your risk, and the reason for the trade and the result. Then analyze a sample of the last, or at least the last 50 to 100 trades. This will help you identify recurring mistakes and eliminate them from your system. So if you record everything that you do, like I said, up to sort of 50 to 100 trades, then you could go back to them 50, 100 trades, and then you could see where your losses are and where your wins are. And you could quite easily see your mistakes. And you could see whether it was through emotions, or you can separate the emotions from the actual skilled trades. That's I think everyone should have a journal. Everyone, even professionals, keep journals because they need to keep track on what and how they do it. I do every day, every day. I actually record my screen and then put them into my journal. Now, looking back at the market, this one's a little bit indecisive. We're going to quickly flick through and see what we can find. We're still at 92%, so it's still a good level. Now, it's changing direction the same as it did here. Now, it could just drop quite quickly. It's bouncing around a bit. It's right on the middle Keltner, so I wouldn't do anything yet. I'd want to see it get past the Keltner one way or the other. The RSI is telling me the sellers are gonna put the pressure on. There he goes. So here's the sellers putting this. The sellers are running it at the moment, but it's still bouncing around that middle Keltner. Always a dangerous place to trade, really, in my world. And I think, yeah, this would have been quite a good one. Now it's past the Keltner. Would have put a trade in here, and it's going to go down. It'll either come down to here or here. I think somewhere around this area, and then go back. Selling at the moment. There he goes. Well, it's changed direction a little bit earlier than I thought. And the buyers are getting the hand in now. Sellers are taking back control, or trying to. But I still think it's going to go in between this area here somewhere before it really starts changing direction properly. Let's just see if I'm right here. The RSI is saying the same thing. I don't think it will go much lower than this point here. It's still, the sellers have still got the control. And it's hit the same as there. What is it? It hasn't really gone down that far before. Now it's changing direction. Yeah. And I reckon this would have been quite a good one to trade on. You'd have to wait till the next candle to trade on this, but I don't think it's going to go much lower than that. There you go. Yeah, that's doing exactly what I thought it would do. Or sometimes I wish I was trading. But let's go on to the next one. So you've got a nice pattern there, and then it's changed completely here. So we have no idea what's going to happen here. The RSI say it's going to sell, but you don't want to do anything until it gets to the top Keltner, and once it gets past the top Keltner, then you can make a decision. But I'd want to see the next candle as well. There we go. The next candles, the buyers have got control at the moment. Pressure's being put on by the sellers though. But let's go to the next question. The next question I found was, how do I determine the lot size when risking 1 to 2%? First, determine the amount you're willing to lose. For example, with a $10,000 in capital and a 1% risk, that would be $100. Then divide the maximum acceptable loss by the amount of risk per unit of the asset. This will give you the position size. Position size equals an acceptable risk divided by risk per unit. And taking the pip value into account for Forex. So that's how you determine the lot size. If you want to know more about it, join the Telegram join my Telegram channel, and I'll help you explain that a little bit more. But go to my Telegram, and you can fire me a question in the private messages. Back to the market again. Yeah, this would have been quite a good one. If we put our trade in at the top Keltner, we would have done all right. Now it's getting to the middle Keltner, it's getting a bit dangerous. It could bounce around here for a while. And that's what it's doing. But I think we would have won on that. Yeah, now that next one's come in, we would have won on that. So placed it on the top of the Keltner. That would be in the next minute. And now it's changed direction. So we would have done all right there. And let's go on to the next one. Not a lot there, really. And flipping through the next. Oi. That one's bouncing all over the place. No telling what that's going to do. So I would leave that one. We're a little bit lower than we normally would in our trades, 89% now, but we're not trading today, so we're just looking at the market and seeing how to spot a opportunity. And it's so opportunities are everywhere, but we like to stick to 92% maximum profit. Next one, still at 89%. Not a lot there. Where are we now? Not a lot there either. Let's go right to the bottom. 28%, just for the laugh. What's going on at 28%? See, 28%, you'd only get $28. Well, that's just not enough. But let's try it as one at 55%. A little bit unpredictable. And then we'll go up to one from, say, 59%. It's not done that for a very long time. That's unusual at the moment, so not really one to look at, really. And then we'll go to, say, that was 59. Let's go to 68%. Same again. So it doesn't matter where you go in the market. It's all generally the same, except I like to stick around the 92% because that's the maximum profit. Back to the top. That's a little bit all over the place. Up and down like a yo-yo. Not my cup of tea. Well, let's dig out another one of your questions. And what is the difference? The question was, what is the difference between trade management and risk management. Well, that's quite simple, really. Risk management answers the question, how much can I lose? That's quite simple. This includes position size, risk percentage, maximum drawdown, and total exposure. And trade management answers the question, what do I do with an open position? Where do I place the stop loss? When to take profit? And when to close the trade? Risk should be determined before entering the trade. So before you even enter the trade, you should assess the risk first on every single trade. You should assess it first. What's the the possibility of losing, and assess the risk. And if you assess it correctly and you feel comfortable, then go ahead. But that's good question. What was the difference between trade management and risk management? That's quite a good question, I thought. Now, going on to, let's try the next one to see what's on there. Now, there's a sort of a pattern happening. I mean, it's gone a bit strange there. So it's a little bit risky. You'd have to watch it for quite a while, in the next couple of minutes to see what's really going to happen. But I wouldn't personally do anything there. And then this one, no. Next one. Now, there could be something here. Each time it's gone above and then come down. But here it did something a bit strange. It went above and then stayed above for a while and then come down. So it could be something the same or in between this. It looks like it's going to do the same as this one. So the RSI is saying it hasn't finished being bought yet. So the buyers are still fairly strong here at the moment. The RSI is not. Oh, the RSI has now changed direction. So now it's time to look at it. Now the RSI has told you that. Now take a look at it and watch it. I would want to see the next candle to give me a little confirmation, just to confirm the RSI. See, that's changed direction again. Well, the buyers are trying to put the pressure on. The sellers have got a little bit more pressure. And it's coming up to that top Keltner. The RSI is still saying the same thing. But you'd want it nearer the top Keltner. There she goes. I would probably put it in here. Now, if we put it in at the top of that one, let's wait and see for the next candle, because our time is 1 minute. And let's see. It's going to be close, though. Oh, it's going to be close. We need the next candle to come in. We don't need that to go into the green or higher in the green. We want it to stay in the red. That means we would win. Looks like the buyers are trying to put the pressure on here. They are trying to put it on. That's the next. See, I think we would have won that one. Seeing that candle and that candle, we would have won that one. So it wouldn't have been a bad one. Now let's get on with the last question. I think it's the last question, yeah. What is the difference between OTC and regular currencies. OTC stands for over the counter, trading outside a centralized exchange rather than being a separate type of currency. Forex itself is primarily an OTC market, so it's important to understand what exactly a particular platform means when it labels something as OTC. So, over the counter. Before trading, you should check the source of the quotes, liquidity, spreads, and the execution of the conditions or the execution conditions. Um, so that is what OTC means. It's over the counter. It's trading outside the central exchange. So you're not trading on the exchange, you're trading outside the exchange. So let's go back to the market. Now that one has gone right in the pressure. The buyers have put the pressure right on there. Uh, and then this one's doing the same thing. So there was a few deals in today's stream we would have won, but we have gone through the list quite a few times. But that's part of it. You just keep having to look for them opportunities. But don't forget, anyone who is thinking about giving this a go, and you're sitting on the fence, and we have a minimum deposit. I have a minimum deposit of $30, and I will give you 100% bonus on your deposit. So if you put $30 in, you'll get yourself another $30, which would be round it up to $60. So you'll have $60 to test the market and try it. But be careful, and don't just trade for the sake of it. Actually look at them all, look for the patterns, check the RSI, and it's if you let your emotions run away with you, it's very easy to lose your deposit very quickly. $60 is not a lot. It's quite easy to use the $60 to make some money, and it's a good start. But you have to be very disciplined and very careful, and that's what I would say. And I will be in Telegram in about an hour, something like that. So join me in Telegram, and we'll have a live session there. And then I will actually be doing some trading. So right now I'm gonna end the stream and go and have a cup of coffee, relax, clear my head, and hopefully the market's going to be the same when I come back in an hour. And this time I'm going to make some money. But I'll see you guys in about 50 minutes, an hour, and let's go and get some money, shall we? I shall see you soon, guys.